The Real Estate Insider, going inside the world of real estate to educate and demystify the home buying process. The first and last lesson before you start your home buying journey is do your homework.
Hello and welcome to the Real Estate Insider. My name is Denise Connor and I'm a real estate agent in the greater Nashville area and host of today's show. In this segment, we'll be focusing on the financial aspect of the home buying process. We hope that after viewing our program, you will have a better understanding of how the financial process takes place and that we answer some of your questions. Once you have selected your real estate professional, we will go over the details of what you are looking for in a home and sign the confirmation of agency agreement. These explain the duties of the agent and explain the relationship the agent has with the client. The next step in the process will be meeting with a loan specialist and getting a pre-qualifying letter to find out just how much home you can qualify for. With me today is Tim Davis, a loan consultant, and David Weber, a chief marketing officer for a title company. Hello, and welcome to the Real Estate Insider. My name is Denise Connor, and I'm a real estate agent in the greater Nashville area and host of today's show. In this segment, we'll be focusing on the financial aspect of the home buying process. We hope that after viewing this program, you will have a better understanding of how the process works and that we answer some of your questions. Once you have selected your real estate professional, we will go over the details of what you are looking for in a home and neighborhood and go over the confirmation of agency agreement. The next step in the process, we will be meeting with a lender and getting a pre-qualifying letter to find out just how much home you can qualify for. With me today are Tim Davis, a loan officer, and David Weber, a chief marketing officer for a title company. Let me start with Tim, our lender consultant.
That's right. Good to be here today.
And we want to talk about the pre-qualifying letter.
Sure, absolutely. So when you're a client and you talk with a lender, they're going to get some information from you either by telephone or in person, or maybe you even have gone to their website and applied online. And after they've gathered this preliminary information, they're going to check out your credit rating and match your credit rating and what you've listed on your application up against potential loan programs that you could qualify for. So once they've got that complete, they're going to issue what's called a pre-qualification letter. And that pre-qualification letter is basically going to outline the terms and conditions of the loan that you could be possibly approved for. That would include the payment, how much you could potentially borrow, how much you would have to put down on the home if the down payment's required, what closing costs might be involved in the transaction, and also the dollar amount that you could go out and actually look for with your real estate agent in terms of a home. So those are some of the items that are going to be included in your pre-qualification letter that your lender issues to you that you can then get with your real estate agent about.
And at that point, would the client need to bring their financial statements in, or is that later in the process?
You know, I think it's a great idea to bring in your financial statements early in the process, right? Because the lender is going to want to look at, when you put that application in and you say, well, this is how much money I make and this is where I work and this is how much money I have in the bank, they're ultimately going to ask to verify that information. So since you're going to have to provide it to them at some point during the process, it's just better to go ahead and get it to them early in the process, and that way they can make sure they have a really accurate pre-qualification letter, because a little bit of income one way or the other can make a big difference in your house payment and what you could qualify for. So I would get all that documentation to them right in the beginning.
Okay, once we have the pre-approval letter and find the right home, we're then ready to make an offer and get the contracts drawn up and signed. After the offer is accepted, you will be asked for a good faith deposit or earnest money so the seller will know that your offer is made in good faith. The earnest deposit will be held in escrow by the title company and applied to the purchase price at the closing. So David, can you tell us exactly what your role is as a title company?
Sure, Denise, I'd love to. Once the title company receives the contract and the earnest money deposit, we begin our process. That consists of us going to the Register of Deeds office and pulling the property records to make sure that you and your client know what liens are against the property, and that the lender also knows what liens need to be paid off so that your client can get their lien position and the lender can get their lien position. When I say that, I mean to make sure that everything from any prior owner has been paid off so that your deed and your mortgage are in the proper place so that someone else doesn't really own your property even though you think that you do. Sent the title commitment to the lender. They put the file into underwriting, and I think Tim would like to discuss that with us.
Okay, Tim, could you tell us about what the underwriting process is?
Yeah, absolutely. So the client has given in all the information, their paycheck stubs, their W-2s, any bank statements, right? And then the title company's provided the lender with the title commitment showing exactly what liens are on the property and what would need to be paid off. And we call that part of the lending process actually processing. So during processing, the lender will gather up the title commitment, the financial documents from the customer, as well as other documents needed such as the appraisal. And so they'll go through this process of gathering in all this documentation, both from the client and from third parties. And once all that documentation is gathered at the lender's office, they'll put the file together and actually turn that in to their underwriter. So what happens at that point is the underwriter takes all of the documentation that's come in, and they take the pre-approval that was issued in the beginning, and they start matching it up to make sure that all the what we call conditions that are in the pre-approval letter are met with written documentation. So if they find any discrepancies in that or anything that they might need additional explanations on, they can end up asking the client to provide them some more documentations to support the loan approval. But that's the process that really is taking place prior to the closing.
And at that point, you would just send whatever my clients need. You could always just call me, and then I'd get a hold of my clients and
yeah, sure, absolutely,
keep it running smoothly.
Yeah, I think the lender really is the hub that connects, you know, all the communication back to the real estate agent and to the title company, as well as to the client, and they're keeping everything sort of together in this communication connection hub.
Oh yeah,
if you will.
And at this point, we all work very closely together.
Yeah, certainly, and the clients don't. Sometimes they'll think, well, do I have to keep up with all this, and do I have to call the title company, and do I have to call this person? And that's actually not the case. The lender will actually be the central hub of communication between everybody in the transaction, the customer, the real estate agent, and the closing attorney or title company.
And David, what is your role in this part of it?
Sure. Well, after the file goes through underwriting with the lender, they send a closing package and closing instructions to my office. At this point, we prepare the settlement statement. The settlement statement breaks down all of the fees for the transaction on a buyer side and a seller side, and shows where all the money is going to go. Once we've completed that, we send it back to the lender for approval. Once they've approved it, we send it to each of the agents. The agents then share it with their client and make sure that everyone knows how much money they're getting back or how much money they're bringing and all the details associated with that.
And that's actually called a HUD-1, correct?
HUD-1, correct. That's the nickname that's given to it because it's mandated by HUD. So, yes, ma'am.
And at this point, what is the lenders doing at this point?
Right, so like David said, the lender sent what we call a closing package of all the paperwork that needs to be signed at the closing attorney's office. And so the lender at this point is making sure and waiting to hear back from the closing agent that everything has been signed and any monies that were needed by the borrower were brought to the table and they were receipted in. And they'll double check that the signatures were all put on the documents in the correct places.
We need to cut for a second. Okay. Sorry, I think I think there was more I needed to say before it went back to him. Just okay. After we've gotten approval from all parties, we have everyone into our office for the closing. At this point, the title company reviews all of the lender's documents with the buyer and the seller. We want to make sure that everyone knows everything that's going on with the transaction, what their interest rate is, how much money they're borrowing, what the payment is. The seller needs to know what loans are being paid off on their behalf, any other debts that are being taken into consideration. And we just have them execute all of the documents. We send copies of all the documents back to the lender so that they can approve the closing and make sure that it happened okay, and then they're going to send us funds. And I think Tim would like to share some of what happens in that process.
And what I do in between that too is they send me the HUD-1 statement and I go over it with my client just to make sure everything is exactly the way it was in the original contracts.
Yeah, exactly. I think the key that we're trying to key point that we're trying to make is that the customers are going to be fully aware of all the monies and where they're going and what their payments and terms are going to be on the loan. And once the title company has sent the paperwork back that's been executed or signed by the clients at closing, the lender is going to review that to make sure all signatures were in all places, and they're going to issue what they call a funding number, which is basically like a code that the title company is able to punch in to get the wire of money into their office.
Well, David, after you get the funding number,
verify that the wire is in our account, we disperse the funds exactly how they were laid out in the HUD-1 settlement statement. At this point, realtors, sellers, everyone gets their funds, and they exchange keys so that the buyer actually takes possession of the property. When everyone leaves our office, we're left with a pile of original documents. Some we send back to the lender, but the warranty deed and deed of trust we hand deliver to the Register of Deeds office to get recorded and made of record. Once this is complete, we issue an owner's policy for the home buyer and a lender's policy for the lender, send those out to the respective parties. The home buyer is going to want to hold on to the owner's policy, number one, in case he needs to use it, but number two, to get discounts on title insurance if they transact the property in the future.
that sounds really good.
Yep.
And we're all set at that point, right?
That's it.
Yeah,
that's it.
our clients are happy. They have their keys, they're in their house.
Hey everybody, my name is Tim Davis, and for 17 years I spent my career working as a mortgage loan officer in the lending industry. Today I work as a consultant to some of the best mortgage companies out there on the market today, and I want to share with you the process that you need to go through in actually getting approved for a mortgage loan. Now it's really important once you've talked to your real estate professional that you then reach out and contact a lender and a loan officer to find out about getting approved for your mortgage loan. The reason that's so important is simply because you don't want to go find a house until you have your financing in place. Now actually, getting a mortgage loan is really simple. It's really easy. There's actually 3 ways that you can actually apply for a mortgage loan today. You can contact a loan officer and speak with them by the telephone, and they can take all your information that way. You could also go online to their website and apply for your mortgage loan there. And lastly, if you wanted to meet with the loan officer in person, they would be happy to meet with you face-to-face and discuss your situation and your financing options. Now, a big question that people will have is, what are they going to ask me when I apply for a mortgage loan? Well, the answer is really simple. They're going to ask you about yourself, your date of birth, your social security number. They're going to ask you where you work, what you make, where you live now, and what you're looking to buy and how much you're looking to spend. Now, all of these questions you're certainly going to be able to answer, whether it's in person, online, or by the telephone. But you want to make sure you give your all the information to your loan officer so that they can make an accurate and informed decision about the type of loan that you can get approved for and what you would need to do and actually to close on that mortgage loan. Now, once the loan officer has gone through your loan application, they're going to pull a credit report and they're going to research mortgage loan programs that you would qualify for, and then they're going to give you a list of items that you would need to provide to them to support your loan approval. Once they've talked to you about your loan approval, you're going to learn how much your payments are and the terms of your mortgage. And then you're going to want to round up the items that they've requested. Those could include things like your photo identification, your W-2s and paycheck stubs for 2 years, your tax returns for 2 years, your bank and retirement statements for the last 30 to 60 or 90 days. You'll take that information, you'll turn it into your loan officer, they'll take that and get your final mortgage loan approval. At that point, you can reach back out to your real estate agent and start to look for homes that are in your price range and in your budget, and you'll have a much more successful home buying process when you take the step of literally calling your loan officer, getting approved, and providing them the documentation they need to support your loan approval. So hopefully that helps you out and helps you understand the lending part of the process. My name's Tim Davis, and I really appreciate the time that you took today to tune in to become more educated as a home buyer.
Hello, my name is David Weber. I'm the Chief Marketing Officer for a national title company headquartered here in Middle Tennessee. Now that you've completed locating your property, getting approval, getting all the inspections done, and getting properly insured, your whole deal will culminate in a title company. Before your deal can finally end up at the closing table, there are several services that the title company must perform to make sure that you're getting proper title to your property. The first item is the title search. We physically go to the Register of Deeds office and pull all of the records for the particular property that you're interested in. This will include mortgages, tax liens, mechanic liens, property taxes, anything that's vital to conveying proper title to your property. After we get those records, we prepare a title commitment letter. This allows your lender to know what items have to be taken care of before you can close on your property. Once the lender knows that you can convey proper title to the property, we will perform the closing. At this point, you come to our office with your realtor and your lender and sign all the documents for your property. This is probably the most exciting point of this process because at the end of it, you become the owner of your home. Once you have closed on your property, we've gotten the documents recorded at the Register of Deeds office, we are ready to issue a final title policy. This guarantees that any lien or encumbrance from a prior owner has been paid off. You might wonder, why do you get title insurance? Title insurance is an important part of the process because you never know what has happened to a property before you take ownership. There are many scenarios that could come and affect you down the road, and you want to be insured against that to make sure that you're not paying for someone else's mistakes. A good example of this would be that if someone had a roofer put a roof on their property 2 months before you close and failed to pay that roofer, he may go and file a lien on the property even though the work was not done for you, it was done for the prior owner. If you don't have a title insurance policy, you're responsible for paying for that lien. The amount of money that you will come to the table with to buy your owner's policy is easily paid back in a scenario like that. Tennessee has several different aspects to the title process that other states do not have. One of the key ones is split closings. In most states, all parties come to the table, the buyer, the seller, their representatives. In Tennessee, we have split closings where the buyer closes at one title company and the seller closes at another. There are several fees that each side is responsible for paying for in the title process. Typically in Tennessee, a seller is going to pay for the title policy that we discussed earlier. All of the fees to record documents at the Register of Deeds office are paid for by the buyer, as well as a traditional closing, title search, and document preparation fee. When shopping for a title company, there are several key components that you want to look for. The first being that they have an attorney on staff. This is important because you're using legal documents to convey property from one owner to another, and you want to make sure that they are properly prepared and reviewed by someone who's licensed in the state. The second aspect that you look for in a title company is that they have a strong working relationship with your lender and your realtor. There are a lot of pieces that move behind the scenes in these transactions, and if all parties that are working together have done so before, it usually makes it a lot easier to get the deal done smoothly and on time. Hopefully this has given some insight to the process of picking a title company, why you need a title company, and what role we play in the closing process.
You can follow along with our program today on pages 2 to 9 in your Home Buyer's Guide, which has been created for you by the panel of the Real Estate Insider. First thing we'll go over is your financial concerns. How much home can you afford? We have charts and graphs that will help you to figure this process out. First thing you want to do is talk to a qualified lender. Some of the statements and assets that they will ask you for will be your Social Security number, your W-2 forms, pay stubs, employment history, bank statements, creditor information, federal tax returns, complete records of assets. Next thing you will talk to your lender about will be which home is right for you, and you will also go over this information with your real estate agent. Next, you will be asked for all this information to go into a pre-qualification or pre-approval letter. You'll have a mortgage overview. What kind of lender are you going to be borrowing from? There's a few types of lenders. One is a mortgage broker and the other is a traditional lender. Traditional lenders being someone like your bank. What are the terms of the loan? The different loan types like fixed rate loans, adjustable rate loans, Federal Housing Administration, which is an FHA, Veterans Administration, and we'll also explain what points are. What additional fees will be required in the loan origination fees, underwriting fees, broker fees, transaction settlement, and closing fees. These are all covered in this. The down payment, mortgage insurance, and interview questions for your lender. We hope this has been informative for you today and helps you have a better understanding of the home buying process. In today's lesson, I will be going over the paperwork that you'll be introduced to as a buyer. This is the paperwork that you will go through with your real estate agent, and it's the purchase and sales agreement. The first part of your purchase and sales agreement will be working with a real estate professional, and what this does is let you know exactly what the real estate professional's role is in the buying transaction of the process and what the role is to working with the buyer. Confirmation of agency status. This lets the buyer know exactly what the status is with the agency that the real estate professional works with. You'll go over that in detail. The purchase and sale agreement. There's a lot of pages to this, so there will be a lot to go over, but we'll just do a little quick overview of this today. This is what will be included in the purchase of your house. It tells you what things will remain with the house, what things will not remain with the house, if there's leased items like security system, things like that, that would all be part of your purchase and sale agreement, and you'll go over this in step-by-step detail with your real estate agent. Tennessee Residential Property Condition Disclosure. This is what the seller fills out with the selling agent, and they go over the different things that may or may not be wrong with the home to the best of their knowledge. Some things that they don't know about which is what the home inspector is for, is different things that they might not know about, maybe the roof or something. To their knowledge it doesn't leak, but a home inspector could find a leak or something like that. But that doesn't go into that much detail with this. This is just what the seller knows about the home. Disclaimer notice. Now what this does is let you know that the real estate professional is a real estate person, but they're not actually a home inspector, and that you are instructed to go ahead and get a home inspector or a termite inspector or an environmental hazard inspector, or if you want to find out the exact square footage of your home, to get that done with the professionals in each category of what the service is for. That as a real estate professional, everything is estimated, and it's not legally put together by the real estate agent. That is from other professionals in the industry. Exclusive buyer representation agreement. This lets you know that your buyer's representative is going to take care of you in your best interest and make sure they can do everything they possibly can in your best interest. Lead-based paint disclosure. You may see this if you are going to purchase a house that has been built before 1978. This lets you know about lead warning signals and things like that. They have to do with lead. Counter offer, you would see this if you offered something on a home and the seller did not accept your terms, and he will then fill this out on his side, send it back. The real estate agent will go over this with you, and it will go back and forth until the two make an agreement on the price. or it could be even something with, say, a roof or a repair or something like that. That would all be in your counteroffer. Buyer inspection, contingency removal. This would be if you did not want to have a home inspection, or if you did want to have a home inspection. At this point of your sale, the home inspector would do the home inspection, and then again from here you would say, yes, we will do these repairs, or no, we won't. And this is all negotiation, and this is what this is for. Repair counter proposal. This goes along with the other document. This is if you wanted to have repairs done on the home, you can negotiate that into your contract, or the seller could say, no, we don't want to put that in the contract, and this is what this is for. Closing date. Hopefully your closing date never changes, but if it does, you'll see one of these in your packet, and you'll be filling this out and signing it. Anytime anything is changed with your contract, you have a paperwork to go along with everything that has been changed.
We hope you have enjoyed our informative program today and have a better understanding of the money and finance portion of the home buying process. The panel of the Real Estate Insider have created a home buyer's guide with step-by-step instructions for you in a workbook form, and it is available on our website. Thanks to our financial experts, Tim Davis and David Weber, and your host, Denise Connor. Please tune in next week for the episode called Inspections, Appraisals, and Insurance, where we will go into more detail about this portion of the home buying process. Thank you for viewing our program, and remember, before buying a home, do your homework.